Are you looking for 5 potential value stocks? Are you looking for stocks in general to invest in for 2023? If so, stick around because I'm giving you my top 5 potential value stocks that you can invest in today for future success. Welcome back to the channel. My name is Ryan, and today we're going over the top 5 stocks in my portfolio for 2023. For those of you that saw the title, these are potential value stocks. They may not be stocks that you would normally think of, but we're going to go through and research some of these and then design a portfolio out of these stocks for a successful 2023. So first off on the list is Carnival Cruise Lines, Carnival Corporation. You're probably familiar with, Carnival, Royal Caribbean, Disney, they're all cruise lines, but Carnival's very interesting for a few reasons. One, it had a difficult time during the early days of the pandemic. It was one of the biggest cruise operators, and it had to halt some of the sailings or some of the departures. That sent stock profits into a free fall, and some of their debt soared. Today, things are looking a little brighter. Their debt is still high, and Carnival does face a lot of impact of higher interest rates on some of its variable rate borrowing, which could lead to some higher costs. But the company is making efforts to become more efficient. Demand for cruising is back, and Carnival's progressing towards its earnings goals, which is great. For example, in its most recent quarter, adjusted earnings before interest, tax, depreciation, amortization, or EBITDA, as I've talked about before, turned positive for the first time since sailings resumed. And the company has also said that future booking volumes have topped those have already sold in 2019. Carnival shares are trading about 1x sales, which is down from more than 12x back in January, which is great. If the company continues to improve its adjusted EBITDA, the bargain share price may not last too long. And if you look here on my screen, I'm in TradingView. Again, I'm going to link that, and I've talked about this before. But one of the things you want to look at here is year to date. It was trading back at around 22. Now it's trading today during the filming of this video at $8.89. Some of its technicals do say sell. I would say the rating should be neutral, more so to buy. And the price to earnings ratio looks very, very attractive. Not only given the multiple on the stock, but again where we're headed in the future. One of the things I do like about TradingView is the forecast tab here. If you're not a member, I'll send the link down below in the description so you can sign up for a free 30-day trial. But one of the things I like here is it does give you a projection on a 1-year forecast and where it might be a year from now. So if you look out here, it's saying that the max, where it sees max 113% increase would be $19 a share. I'm more realistic. I see it being about $14 to $15 a share in another year, which would be almost a 90% upside. So, still very attractive. Okay, next one, Disney. Disney's taken quite a beating over the last 2 years. For those of you who aren't familiar, they just replaced their CEO with Bob Iger, who was former CEO, now current CEO. Disney has an enormous investment in its streaming services, which have hurt earnings, and the company's struggling with a lot of higher costs. But the entertainment giant could be moving, I think, towards some better days. Like I said, Bob Iger's back in the driver's seat, and he plans to stay for at least 2 years to boost some of the growth at Disney and choose a successor. And there's a big reason to be optimistic about Iger. He's done well in the past. He tried to do well with the last CEO, so we'll see how things go. But he does have a solid track record. He's ran through several acquisitions, successful to be exact, through revenue, profits, and share performance during his tenure. Disney shares traded about 22 times forward earnings, down from 40 earlier this year, so that's great. It's becoming more attractive on a multiples perspective. And considering the gains we've seen in parks revenue and potential growth with Iger, this does look like a pretty good steal. Now, if I move over here into the trading window, you can see earlier this year to date, it was trading around $157 a share, and as of today, it's trading around 93. So if you are bullish on the stock, it's a great time to buy. From a forecast perspective, you're seeing that the analysts are giving it a very strong buy. I would tend to agree. They have upcoming earnings on the 7th. Their EPS is 1.73, which is great, and they have a pretty low PE ratio, 54, almost 55, price to earnings on a trailing 12 months. So you'll see the multiple here is, the price here in a year, they're thinking a 54% increase in price, which puts it at $145 a share. So Very attractive, something I would load up on if you are a Disney fan and have seen past performance and you're a big believer in Bob Iger. All right, number 3, Moderna. Moderna is very interesting because it's obviously done well during the pandemic. If I go to the year to date here, you can see it's almost reaching back up into levels it was a year ago, but still considerably lower than the 5-year outlook. A lot of people did move away from Moderna this year, despite the company's billion-dollar earnings. That's right, billion with a B. That's because, the coronavirus vaccine is Moderna's only product, and investors worried about revenue in a post-pandemic world. That makes sense. But Moderna did help some of the concerns recently when it offered clues about some of the post-pandemic vaccine market. The biotech giant predicts it will follow that of the flu vaccine market. If that happens, global coronavirus vaccine market could represent 12 to 24 billion annually. So there's a lot of potential upside there. And Moderna's vaccine revenue should decline from today's levels of around 18 billion. The company's market predictions are right. It still could continue to bring in a lot of significant revenue, but it does need to diversify into some other revenue streams. Moderna is looking to launch 2 more respiratory virus vaccines in the coming 2 to 3 years, so that's hopeful. And the company's growth story is far from over. Moderna's stock already has started to rebound over the past few months, but they still look like a buy to me, considering the company's big growth perspective. In this case, they do have a pretty good their technicals are great, and you do see a buy rating from the analyst side. If I go into the forecast here, though, you'll see a pretty big upside, 136% increase. I mean, that's if both of those vaccines hit the market and end up doing well. Of course, there is some potential downside. There's some are saying there's a 50% drop off from where they're at today. It really just depends on where you think COVID's going to be, where the flu vaccine and then some of the respiratory drugs could be in the future. Certainly not an Alzheimer's drug or anything like that. That would be a massive pop for any company, but respiratory viruses are still a big problem, and Moderna aims to try and fix that. I like this price projection. I'm calling it at about $350 in 12 months. I do think they'll get at least one of those drugs out there on the market, patent it, and they'll see some good revenue. All right. Next one, Starbucks. I think a lot of people are very familiar with Starbucks, what they do, but there are plenty of reasons to love it. It's difficult. We've got a very difficult economy today. Inflation is still way above 40-year averages, and they keep coming back. It definitely had a big sale back in September. So if you see back in September, it was trading around $82 a share. Now it's at 101 as of today's recording. It recently ended its fiscal fourth quarter with net revenue climbing to 11% to a record $8.4 billion. And the biggest one is the loyalty members here continue to grow in numbers and boost revenue. Active Starbucks Rewards program members increased by 16% in the US to more than 28 million, and these members were responsible for about 55% of spending in Starbucks stores, which is absolutely incredible. So you think about all the money that's being brought into these rewards programs. It's either customers are reloading and putting it back on their card, or they're just letting it sit there and accumulating a big war chest of money and capital for Starbucks to then go out and reuse, whether it's on M&A, improving operations, etc. And they continue to open new stores and press ahead with reinvention plans to spur some of their growth. The average forward P/E ratio for the non-alcoholic beverage industry is about 52, according to NYU Stern Business School. But today, trading at just under 30 times forward earnings, Starbucks looks like a pretty good buy. Now, if I go over here to the forecast, you do see a very strong buy, you see a buy here from the technical analysis. You'll see here, we see about a 17% upside at the best and about a 14% downside at the worst. I think that's probably correct. I put about a $120 price target in a year from now. I do think that heading into the holiday season, which we're in now, I think that bodes well for them. Going into the spring, we'll just have to see. I know typically they sell more drinks and they sell more during the holiday season as people are out shopping, etc. Into the summer, they pivot a little more and rotate back into the iced and the colder beverages. Okay, last one. CRISPR Therapeutics. CRISPR Therapeutics, for those of you who don't know, is heading for a very crucial moment. The biotech company partnered with Vertex Pharmaceuticals, which I've talked about on this channel before, and they're submitting a Exocel, which is a candidate for blood disorders, to regulators in the U.S., Europe, and the U.K. If Exocel is approved, it'll be CRISPR's first commercialized gene editing product, which is incredible. This is key for two reasons. First, it's a great sign for potential CRISPR's gene editing technology, which being able to edit your genes or edit out certain deficiencies in the DNA strand would just be a monumental moment for humanity. And then second, it would represent CRISPR's first product revenue, which is also great. Exocel has a blockbuster potential. It's really a very untapped market. Treatment options are limited for blood disorders, sickle cell anemia, cell disease. Exocel is designed as a one-time curative treatment, so a one-time injection or a one-time pill in order to fix that. Regulators are looking at it now. CRISPR is also studying an immuno-oncology candidate in a pivotal trial, and this candidate may offer another revenue opportunity in the not so distant future. So a lot of great things coming out of CRISPR, a lot of potential first revenue targets for them. CRISPR's share performance hasn't reflected all this progress though. The stock declined more than 30% this year, and it did trade at higher levels when product commercialization was further away. So be careful with that. But I do think a rebound in the stock is going to happen. Almost a $4 billion market cap. They do have negative earnings because they don't have any revenue at this time. I do think one of their drugs will pop, and I am a buyer of this. You see on the high end, just like many pharmaceutical stocks, if they get that one, they get that one product out to market, that could send the stock absolutely soaring. But on the high end, you're seeing a 332% potential increase in price, and on the low end, about a 27% drop. I'm saying it's about a $250 stock. I'm saying it's about a $150 stock in the next year. I think that adds in the potential for one of their drugs to hit, and also factors in some potential misses there. So these are 5 great stocks that I'm looking at for 2023. A lot of potential value gain here. I'm going to be adding these to my portfolio. I'm going to put them in the M1, which I'm going to link up here, into my M1 video about building a resilient portfolio for 2023. But that's going to wrap it up for today. We've researched 5 stocks I've added to my portfolio, and then we've also designed an efficient potential value stock portfolio heading into 2023. So let me know in the comments what you think, and remember to always design for your financial future. Take care.